I turned my mic on. Can you hear me? Okay, real quick. I saw in the news today BYD of China is posting their specifications for their new Seagull four-door sedan, 190-mile range, 10,000 US dollars. And then one of the models, I think it's 14,000, is 250-mile range. Your comments on how that will affect Tesla and their $25,000 car? So my follow-up question is, doesn't that speak largely to the cost of a battery pack that would get 250 miles range? And is the architecture cylindrical or pouch, or do you know anything about that?
Yeah, when I joined as speaker, I couldn't quite hear the last things that were said, but I'm excited, kind of excited for this price war in China, because I think it's going to show that there's no other competitors other than Chinese car makers. It's going to push all the other car makers out of the market. And it looks like that's going to play out sooner rather than later.
Out at the same time. But
Gotcha.
there's always a problem at some point at the beginning. I have to kind of
Yeah. Maybe
Anyway.
quickly, can I just
yeah,
say,
keep going.
like it's what's just so people know, like there's a big price war going on in China right now. So Autoline, what is it called? Autoline Network. They do a daily kind of car world roundup, and it's actually really good because they get crazy cool inside information. So it's a good kind of watch every day, and they're demonstrating the price war really well. So like you can see this like on a daily basis, and it's fascinating because it's obviously like for folks that may not know, China is the largest car market now by far, and they're transitioning to EVs very quickly. It's happening a little bit faster than Norway, which is the leader. They're like 85% EV now, and China is roughly like 25%. So this is happening very quickly in China. They're on their like overall, I'd say like fourth generation of EVs. And the rideshare companies, like a lot of reports were showing that rideshare companies had kind of recycled a lot of their old EVs. And so this new push by these low cost EV variants is quite surprising, but it's also super cool. It's showing that not only does Tesla have a great product still in the market, but the market is quickly expanding to all variants of vehicles. So like we're seeing really large kind of these MPVs. We're seeing utility vehicles. We're seeing really, really small cars too. So the whole market is starting to fill out really nicely. And I think, if people think this is bad, great. But I think it's good because it demonstrates that EVs are the future, because the largest car market is rapidly transitioning, as opposed to the US, which is not so much. So this new round of subsidies, subsidies we can talk about for insurance and new price reductions kind of speak to that, how quick this is happening. Anyway, just thought I'd say a few words.
Thank you, Wes. I can't accept the request to speak from protected accounts. Harry, go ahead. Harry, go ahead.
Hi. Yeah, I appreciate everything you guys do with these spaces. I just had one question. Like for the China angle, I know that like versus a benchmark rate that we have in this country, they have like specific interest rates for different sectors. So like that could be a bit of a another leg up for them, because like cars, specifically EVs. Yeah, I don't know if anyone knows about that.
Ashim, you want to answer his question?
No.
Okay. What do you want to talk about?
Well, I was trying to take a break and, kind of come and talk when I actually have something to say. And there's a few things of note, I suppose, today. One is, finally, Tesla Model 3 listing price on Used Car Gurus is now below the Car Guru Index for the first time. And the downhill trend is still going. I don't know where it's going to stop. And it's not just Model 3. Model Y follows exactly the same trend. So it's nothing specific to Highland. It's just the continuing degrading demand for EVs in general. And
Did you see my article on Seeking Alpha on the topic?
No, oh my God, you posted on Seeking Alpha?
Mm-hmm.
Wow.
The only platform that actually pays me anything. So
Wow.
yeah, I did post.
I will check it out. So I think that's
and yeah, do you have a subscription there?
no way. And I will
Okay,
just,
well, if you don't have a subscription, you won't be able to read. And don't get a subscription just to read my article.
oh no, I'll
Okay.
be able to read it.
No, you can't. How?
Yeah, I'm not telling you. I know how.
Okay, well, I'm glad you have a way, because they apparently they changed things a little bit. Now it's just all premium subscription. But if you can't read it, I'll send you the link. But it's basically what I'm trying to say is, if anybody here does not have a subscription to Seeking Alpha, don't get a subscription to Seeking Alpha just to read my articles, because basically what we'll talk about here, like it's just going to be articles every now and then about different companies, and if you're in this space, you're gonna get 99% of the content. So the subscription is like $239 a year, and apparently they ended free content. So That's the only way you can read it. So don't get a subscription just to read my articles. It's going to be 99% the same content here. It's just maybe some more colorful language because of you're trying to get clicks and stuff. Though aside from that, it's going to be the same thing. But if you end up reading a machine, you're going to note something anyway.
Yeah. So I don't think there's anything big picture new here. We know there's been demand issues with EVs, and first quarter seems like it's going to be worse. Obviously, Troy showing lower and lower estimates of production deliveries. We're going to get a low automotive earnings this quarter. In fact, I thought I'll have to look and verify. I don't know if it was the Adam Jonas note, if he said it in the note. And keep in mind, that guy's an idiot, but there was some claim that he talked to Tesla investor relations and that they would not guarantee that automotive gross margins have hit a bottom. So, I mean, these are all reasons why, even though I thought the stock was oversold, and when it went back up to 200, I sold out because I just see there might be another correction down in the short term. They're just not making enough money. But otherwise, I was just going to comment on the Musk tweet about compute limit, which is what I've been saying, is that they're definitely compute limited. It seemed like they had only doubled their compute, which for the amount of compute we need for V12 just means the iteration time is going to be too slow. And so it's good to get that common sense validation, but also obviously promising that he's tweeting about it because he seemingly thinks it's going to be at least somewhat corrected soon. So I think that's exciting to see what changes. Is it the iterative speed? Do the releases get sped up? And then also, do we just get better accuracy out of the gate each release because they can let them train for longer than they do now? So I'm excited to see over what time frame that happens.
Wes?
I was going to ask a question about the relative price of used cars, if it's EV domain or if it's all used cars. I thought it was all used cars. And then about the topic.
All used cars.
That's what I thought. I don't think it's specific to EVs or Teslas. But on the compute stuff, yeah, it was good to see Elon say that they were compute constrained.
That index, that webpage, the index itself is for all used cars. However, the trends of massive cuts in prices is more dramatic in the EV domain. Not
is
just
it specific to EV, or
Absolutely.
Is it specific to higher price than the average car?
It's specific to EV. That's not to say that there's not adjustments to higher priced cars, but not to the level of EVs. It's an EV problem, and it's not just higher priced cars. It can't be explained just by interest rates. It can't just be explained by people being upset at Tesla, because it's not just Tesla. Everyone wants to scapegoat the CEO, but I think it's more, and this is speculation, changes in economic sentiment, how much, with inflation, how much purchasing power people have left for things where, yeah, you could say you also wouldn't want to splurge on a gas car, but people in EV is still kind of a new technology. People willing to take risks on that are limited. And then in places like California is, Tesla's largest market, or not just Tesla, the largest EV market in the US. And the electricity rates here have just skyrocketed in the last 3 years. Northern California, the rates are up 30, 50% at least, to the point that people know that the that whole gas savings benefit is gone. It's gone in Northern California. You don't save money anymore buying an EV versus a gas car for transport costs. So I think some things like this are affecting it, and then the question becomes, when is that going to change again? And that becomes harder because you can't just say, oh, lower interest rates, everything's going to go back to normal. No, I don't think so. Interest rate lowering will help, but it's not going to bring it back to the state before. There's still going to be high electricity rates. We're going to have to wait for the economy to get in a better spot for people to be, taking more chances. It's just hard to say, right? So I just think those things that we need to pay attention to. First, making assumptions about what Tesla's gross margins, operating margins are going to be in a year or two from now.
Do you have anything positive to share with us today?
Not much. That's why I'm not coming out as much recently, because there's not much positive to say about the company. Right? That's not.
Well, what about Megapacks? Right? Don't you think Megapacks, growing pretty fast, very fast, and also, margins are better than Tesla automotive margins, right? No one's focused on it, so it's a sleeper. What do you think about that?
I'm positive on Megapacks in general, but if we compare from a year ago, we had hoped that the growth rate would be higher than what it is right now. It just seems like they stopped at one line in the factory at Lathrop factory versus the 2 to get to a full 40 gigawatt hours annual rate. And it seems like there's no real evidence yet that they've upped it from the 20. So certainly the amount of gigawatt hours that have been recognized still lags the production rate. If the production rate is about 5 gigawatt hours a quarter, they're still not recognizing a full 5. They're recognizing 3 to 4. So we expect that to contribute a little more quarterly to the gross profit and overall improving operating margin a bit, because like you said, right now it's a better proposition than the automotive. So I am positive on it in general, but in terms of its growth rate and what people will forecast the steady state margins to be, it's not seeming like something that long term is going to, like, it's going to be valued. And we see articles now coming out. I don't know if you noticed, there's some other institutional investors saying, oh, it's going to be worth 120 billion, or that's what they value it at now. And you remember, I think you and I both kind of came to a number and agreed to it. We kind of valued it around 100 billion. And 100 billion is great. I mean, you took any company and said, listen, your product values your company at 100 billion, you'd be happy. The problem is with Tesla, it's already worth 600 billion, and plus or minus 100 billion is like, it's nice. It's like a 15% increase in the share price, but I don't think people are listening to these spaces every day for just a 15% increase in share price.
Yeah, let me ask you this. Do you think Tesla Energy's competitive advantage is larger or smaller than on Tesla Automotive?
That's a good question, and I certainly don't have a clear, confident answer. You would think automotive is much more complicated engineering and complicated firmware, and every piece is much more complicated, to where you could see where small efficiency gains that Tesla practices versus the competition can build up into a significant superior position from a gross margin, operating margin perspective. With Megapacks, it's hard to see that there's going to be that much advantage versus automotive, because there's not much issue of some other company to take cells from cattle, CATL, and building a battery pack and whole module and inverter is not as challenging to catch up on. At the same time, there's no other real American competitor to what Tesla's offering. So even in China, if there's going to be competitors in the U.S., U.S. Made centric competitors, there's not really much. So they may have an advantage in contracts. This is all commercial contracts. They may keep some barrier there that allows them to sell higher margins, at least in the U.S. and maybe Europe. So it's a trade-off between those kind of two different criteria. I think the automotive is more advantageous, but there might be like political reasons why Megapack might be a better, competitive advantage in the U.S.
Okay, it's that simple.
Hey, just curious on how you got the $100 billion valuation. Can you just walk me through that?
I don't remember.
I'll do it. Don't worry. So basically, what he's trying to say is, before he goes on for another half hour without saying much, if I asked Wes what the hell you said in the last 20 minutes, he wouldn't be able to tell you. I guarantee it. Like, I bet you, if I ask Wes right now, did he say larger or smaller advantage for energy? I don't think he would know. You went on and on, thinking out loud, and you didn't say anything.
I didn't give a final answer. I gave you the pros and cons of both.
Yeah. So from now on, why don't you just kind of like start with an answer, and then if I ask for pros and cons, we can dig into it a little longer.
Automotive. There.
But basically, the $100 billion figure that we came up with is assuming Tesla's production plans for Lathrop and China. Get that, take that annualized production run rate, apply the current or maybe slightly lower price per kilowatt hour, and a 25% gross margin, and then a little bit of operating expenses to it, and then apply a multiple. That's how we got to $100 billion. So very basic back of the napkin calculation. The surprising factor on Tesla Energy so far has been that Tesla is not being more aggressive than what it is being. And we don't really have a clear answer on why that is. Like, why aren't they being more aggressive with this production ramp? Because last year, when we were talking about Tesla Energy and Megapack specifically, we all thought that Megapacks would be simpler to build and ramp production than vehicles. And it's just, they've been, taking their time. There's some potential reasons why that might be. We talked about interconnection backlog, but Tesla management specifically ruled that out as a limiting factor on the earnings call a couple of quarters ago. So it's not clear to me why they're holding back. Does that answer your question? It's that simple.
Yeah, partially. In terms of the valuation, though, so you're saying you're also including operating expenses. Is that because you believe the street or investors right now, they are not already including appropriate, R&D and SG&A into the future? You think there'll be an incremental step above the market, or what are you thinking? Because right now, how people forecast the lazy way, it's a percentage of revenue, right? The thing is that as that revenue scales, if you assume the absolute number, obviously due to operating leverage compresses, I don't think you need to include that operating margin portion into that calculation. It should probably just be the gross profit, then a multiple to the.
I mean, there's going to be some operating expenses, right? There's going to be some R&D. Like, we're not like I said, it's minimal. We're assuming minimal operating expenses, but there's going to be some. You're going to have your allocation of overhead. First of all, you're going to have some R&D. Some overhead, including some overhead associated with installation of these things, projects and management and everything. So it's not like a zero, but it's less than automotive, I would say.
And then what was your gigawatt hours deployed in, I guess, I don't know, 2030 or whatever year you want to use? What do you see for the number?
Machine doesn't think about 2030. He thinks about the next few quarters and maybe a year, 2 years out. That's about it. So he's talking about 40, 50 gigawatt hours at Lathrop annualized production rates. Plus, he's assuming some to Giga Shanghai or Megapack production in Shanghai next to the Giga Shanghai. and they're just starting construction of that apparently. So it's going to take a year to build that building. So sometime in early 2025, maybe they'll start to ramp in production, and it's going to take a year or two to ramp that production. So 2025 contribution from a Megapack factory in China is going to be minimal. It's mostly going to be whatever line they have installed at Lathrop. And the second line apparently is going to be started later this year, I think is the plan. So that's going to take a year to ramp too. So let's say at the end of 2025, you're looking at somewhere between 50 to 100 gigawatt hours of annualized production.
Yeah, I mean, I understand. I just don't know how you get the 100 billion still. Even if you're doing 70 gigawatt hours, right? Let's say 390 million per gigawatt hour, which is, I think, below. It should be below what it has been, materially below the past few years. That gets you about 27 billion. If you assume margins stay the same in the short term, because supply can't catch up, you're at about 7 billion, right? In gross profit. You guys are going to assume additional OPEX that's not currently captured in forecasts of 15%. You're about 5.8 billion, right?
Yeah,
And
you came up with that 15% number though. I said minimal, right? So, depending on your assumptions of revenue
but my
per
number is
kilowatt
higher,
hour,
clear, right? Like my number actually comes in higher.
depending on your assumptions for price per kilowatt hour and gross margin, you're going to end up somewhere between $5 to $10 billion of annualized operating profit. So assume some sort of multiple. This isn't again, this discussion isn't supposed to be a pinpoint valuation for Tesla Energy. Machine is talking about currently the market cap is 600 billion. You have automotive, you have energy, and you're still left with something above that. And he's just pointing to, I understand you want to have a DCF discussion. We don't have that here right now.
Yeah, I mean, from my perspective, I'm not looking just 1 year ahead for this. It's a few years ahead. I'm trying to track what I think institutional investors are going to look at to get a comparison of, fair price for now. And, in your examples, I would say they're a bit more aggressive than what I would price in a few years. I would think revenues per pack will be down a bit more. And I believe overall too conservative. I'm not sure if that's conservative. And yeah, we're not hammering over the details, because that's going to get you on even 100 gigawatt hours. You're going to get something around 100 billion. And if I give a multiple of 30, and so yeah, that's going to give me around 100 billion. And so sure, if they scale to 200 billion at some point, that's going to give it a higher amount. Maybe you can get to 200 gigawatt hours, then you can get about 200 billion in valuation. So, but to me, it just sounds, well, okay, for the next few years, this thing could be valued around that. And so it's not a significant mover in terms of the overall valuation of the company, in my opinion. It's a nice thing. And what we hope for is where it should help is right now, when automotive margins and earnings are low, hopefully temporarily, is that the Megapack could give that little boost so that operating margins and overall profits don't decrease again quarter over quarter, so that the valuation of the company, which is based on growth, can continue. Because if it doesn't, there's no reason that the share price has to be.
All right, we have we have things to go kind of work through. What do you think about? So Troy published. I pinned at the top. Actually, it's on YouTube Live. Troy published his delivery estimates for Q1. He's taking them down, so I made that public now. I highly recommend people join Troy's Patreon, even if it's just to kind of learn about how he's thinking about these things. I think it's very helpful. Troy brought his estimate down from 465,000 to 450,000 this is his estimate as of end of February. And he might pull it down further, he says. So, Machine, are you concerned about Troy's estimate being pulled down? I think he's talking much lower numbers too.
I mean, where he's at already, you could argue is concerning because it's like, I forget, is it 420, 440, 420, whatever it is, it's obviously quarter over quarter low, and it's not, I believe, sequentially year over year. I don't even know what it was a year ago exactly, but it's not really much higher. And so the earnings year over year are going to be lower again. And so, like, I don't, even if he doesn't adjust any lower than where we're at now, I'm concerned because the narrative can easily shift on the company if there's no signs of future growth right now. People can get skittish and value the company at a lower multiple.
Yeah, I mean, I'm sure that'll change when Model Y, the new Model Y, comes about. But sounds like it's going to be at the end of this year, maybe early next year. Julian?
Hi, just wanted to ask maybe the reason Mega Effect or the Mega Packs are not doing so well is because of cell constraints. Same old story. Cars are still more profitable to put cells into.
Yeah, I don't know. I don't know if that's true. I mean, we have all the raw material prices plunging 80, 90%. So clearly there's batteries out there. Thank you.
Yeah.
Jersey John, this is at the top of this is on YouTube Live. Jersey John says, Adam Jonas notes, Machine, did you see this one? Management refused to agree that auto gross margins had bottomed in Q3 at 16.3%. And their verbal cues reinforced Jonas's view that auto gross margin could fall further in 2024. Management implied 2024 adjusted EPS could fall well below 2024 Wall Street estimates of 3.07. So is it fair to say you think, so I guess they say 2024 is an investment year, which is, what Martin Vieca had also said, that Tesla is between two growth curves. But I think you and I both agree that, beyond 2024, especially with Optimus coming in sometime in 2025, that's really what the company's all about at this point, right? You agree with that?
Yes. I mean, first of all, I did hear that. And that's what I mentioned when I started talking, is that it seemed like his note said that they wouldn't guarantee that margins have bottomed, automotive margins. So that is certainly concerning. And I would agree that
but that's not news to you, right? Like, that is not news.
Yeah, it is news.
Especially if you have read my article and if you've been in these spaces daily for the last month or so, where we talk about all the incentives. So the article that I published basically talks about, lists all the price cuts and all the incentives that Tesla's offering to buyers. And from up to $5,000 off for demo cars and new inventory cars, to now 10,000 free supercharger miles, value of which I estimate at $1,000 per vehicle. 3 months of FSD, $600 value. In China, you have insurance offerings, a bunch of other incentives around the world. I think the key point is that this is happening around the world. And unlike previous quarters and previous years, these incentives, especially the new inventory page, massive discount, started at the beginning of the quarter. So the margin hit will apply to all deliveries across the quarter, not just the last week of deliveries, where Tesla's you used to just do a final push to meet some sort of target. So it'd be surprising to me if Q1 margins didn't go below Q4. Do you agree with that?
Absolutely. And yes, you're right. It's not surprising at all that someone would think that margins are lower this quarter than the last few. I'm just saying what's surprising is that I think that's it's a sign from the management, from the company, that they're adding uncertainty for the future of when this will bottom. That's what I mean. It adds uncertainty.
How can the company know? How can management know?
It's true. You're true. No, it's true. Don't
you think the primary reason is interest rates?
No. Not anymore.
Well, I guess that's where we disagree.
interest rates have been high for quite a while now. And if you look at the calculation of how much you save monthly at a 3% versus 6% or 4% versus 7%, or alternatively, if you have $700 a month to spend, how much car can you buy? The amount of car you can buy between those interest rates is about $3,000 difference. So you could easily explain to me, hey, we had to cut prices $3,000 to adjust for interest rates. And I would say, okay, got it. But the prices have gone down way more than $3,000. And you could attribute part of that to increased volume. If you want to capture more market, higher volumes, they have to have lower prices. The volumes aren't that much higher than they were a year ago. So there's still thousands of dollars left to explain why isn't that enough? Why do we have to cut even further? It's not interest rates. It's not just the volume. And I'm speculating on what things I think it is. And I don't know. I don't know if I need to know. I'm just trying to follow the trends. And that's why I look at the used car prices indicator, because that has tracked and predicted Tesla price cuts and price raises for 2 years. And it's still going down. So to me, it's just, I don't want to own the stock until I see that settle, or, as you said, really at this valuation level, because it still has a high PE multiple, that really the upside for the company is all FSD, Robotaxi, and Optimus. That's
and Cybertruck.
Yeah, sure. Cybertruck a bit.
Yeah. I mean, Cybertruck is currently going at 6 figures. It's basically a high volume model SNX. Like, you can't ignore Cybertruck. Okay, it's going to generate billions of dollars for the company. Bottom line, right? Don't tell me, yeah, I guess Cybertruck.
No.
Clearly, it's going to be the most profitable product.
The way I'm looking at it is holistically the automotive segment. I'm looking at what I would expect automotive revenues to be yearly, the growth, and the operating margin recovery, hopefully from what it's at, like 8% now, back over 10%. Do I believe it's going back to 20%? No way. Could we get to 15% on automotive? Maybe. And if you start pricing revenues, trajectories of how much the company is going to grow revenues based on each model, that I think even still the current share price kind of covers those scenarios. So any upside from you is AI.
Wessex.
Hey, Yaman. What's up, everybody? Yeah, I had an interesting experience today that I think connects with this conversation. I was in the Memphis Tesla store, if you will, the delivery center, having some work done on my car. And there were several of the new Model 3s there. And I test drove one, which I could tell you about if you're interested. But I asked one of the salespeople, how many of these so far have you all delivered or sold? They said 0. And I asked, well, how long have we had, refresh Model 3s here, at this location? They said about 3 or 4 weeks. And I asked, well, why do you think that is? And this is one person speculating. And they said that, I just don't think anybody really knows about it. They're still buying the older 3 from the used, or from the, not used, but inventory side of things. But again, 0 cars. It's just one store, so maybe it's a fluke. I kind of doubt it. But it concerns me greatly about, Yaman, you said a moment ago that, you felt that the new Model Y, refresh model, whenever that comes out, might have a nice impact or big impact on stuff. And it's like, I don't know. I really don't. So I just thought I'd throw this out there. And I know it's anecdotal, but if you guys are at one of the stores, maybe you can ask what their experience is. Maybe we can find out if, how big of an issue this is.
Wes?
So I don't think I've shared this yet, but I actually bought a Highland and I'm waiting on delivery. It's long range, ultra red, white interior, and it's been delayed. So I'm experiencing a push out. And so my delivery date is April to May currently. So I just wanted to share that.
Yeah, congrats, Wes. That's awesome. You're gonna have to bring it down to Austin. Give us a ride.
Yeah, thanks, man.
Yeah.
Yeah, I'm very excited. The test drive was amazing, so I was sold on the engineering.
Yeah. What do you think is going on with the production there, though? So a lot of people are reporting their deliveries are getting pushed back. You would think
Yeah,
that this is the second time around Tesla is ramping this same
I know.
product, right? What's the problem?
Yeah, it seems like it has something to do with the seats and the white interior. When I talked to the service advisor, they were saying that black was currently on track, but white was delayed. So I'm not sure why. Tesla makes their seats in house, so it could be a number of things. Elon has said before, and I've said many times too. You can't make a car if you're missing like one bolt. You need every piece. So something's delaying it. I just hope that they figure it out quickly. I was excited to see the kind of leak specs about the Performance 3. So I'm kind of hoping that this may be a little delayed so I could switch to that because that looks amazing. But yeah, I'm not sure what's causing it.
Machine, do you have any comments? Actually, you know what? Never mind. You got ev.com? Go ahead. Tesla 420, go ahead.
Hey, so I actually placed an order on January 20th of the Ultra Red Highland long range, but I did it with black seats. And my estimated delivery date it's been pushed back a couple times, but it's March 25th to March 31st. So I do think it's something with the white seats that is causing the further delay, like into like April and May. But mine's been pushed back a couple times, so it could still get pushed back again. I'm hoping.
Okay, thank you. You got EV? Go ahead. Go ahead.
Hi, can you hear me?
We can't hear you. All right, Machine. I'm looking at Troy's estimates for production deliveries for 2024. And I see Cybertruck estimate at 26,000 units. What do you make of that?
Troy's notoriously, conservative with new product ramps. So I haven't looked lately at what he was assuming per quarter. I do remember, I think his later quarters were just like not that much higher. So if we assume right now they're at like 50 a week, I mean, he has data on the VINs for Cybertruck, and he's been indicating like maybe it's like 30 a day right now. Maybe it's or a few weeks ago he said that. So maybe we're at like 50 a day. If we wanted to get to a single quarter that had, let's say, 13,000, you'd have to do 1,000 a week. And that would be, over like what, 130 a day. So that's about 3x higher than where we are now. So I don't remember how long I would assume it would take to 3x production ramp. But if we want to get quarterly numbers that will be high enough to beat what he estimates, I'm looking at that as a kind of key level, getting to that 1,000 per week. Because once you get there, you're pretty confident that, well, number one, if you do that for 3 quarters, let's say Q2, Q3, Q4, you're already going to be well above his target, and you'll be around 40,000 produced for those quarters. So, and obviously the quarters after you get to 1,000, you're going to keep ramping, so they'll be higher. So the question is, when do you think they can get to 1,000 per week or 130 a day? I'm guessing that's going to happen in Q2. So to me, it's going to be higher than 25,000 for the year, assuming there's no other major bottlenecks, which the main one, of course, is 4680 cells. That's an unknown. Like, I think the rest of the process, I think could hopefully scale up to where as soon as they pass 1,000 a week, they could keep going. And then, you know, the Q3, Q4, they're going to hit 2,000 a week at some point. And then you're talking already 25,000 cars in one quarter.
Crazy. Actually, I don't know of Troy being notoriously conservative in new production ramps. That's the first time I've ever heard that.
Maybe I've only really been paying attention a lot the last few years, so I don't remember the Model Y or what he estimated for that.
I mean, I'm pretty sure he estimated quite a bit for Cybertruck for 2024 at the beginning of the year, and then he cut
Oh,
it.
really? So you're saying he
I think
changed?
so.
I don't
I think
remember.
so.
Okay.
Downward, yeah. According to a Reuters article, Tesla has shuttered production at least until early next week, according to the company. The outage will cost Tesla estimated losses in the high hundred. Wes, how long do you think it's going to take for Tesla to bring this production up?
Unsure. It seems like they've done it pretty quick in China, so it seems like it's region specific, and that's difficult to predict or speculate on.
Yeah. I asked Troy earlier, what do you think is the production loss going to be? And I think he said something around 4,800 per week, depending on how long it goes. Obviously, we don't know how long it's going to go.
And are you specifically talking about Berlin?
Yeah.
Yeah. I would think that they would have battery backup for their most critical infrastructure so that none of the machinery was harmed. You know, like instantaneous. So there's no power interruptions. There's no cycles that are missed. The machinery doesn't know the difference, that type of thing, so that they can run for a certain amount of time and safely shut things down. I would assume that that's all in place by now. But the missed revenue, I think, is the main thing, and sending people home and still having to pay them, all that stuff, that's going to accrue rapidly. But starting things back up again, I would assume that they would also be able to generate enough power to be able to, pick things up at a rapid pace once full power is restored.
Mm-hmm. Okay, good. Yeah, so this could be another 10,000 units lost. And it's Model Y delivered. And we also got reports the other day that the Shanghai exports to Europe have declined. Maybe Tesla was banking on Berlin production rising. But Machine, were you surprised by the 10,000 free supercharger miles offered last night?
I didn't know about it. I'm not fully caught up in the last day. Is that just in the US or
Yeah,
worldwide?
just US. If you're trading in a vehicle, you get 10,000 free supercharger miles. Otherwise, you get 5,000. And yeah, I mean, it's great value, especially if you're kind of on the fence about what am I going to do for charging?
I think
until you get used to it.
I think I'm appreciative that Tesla's starting to do more incentive-based or more tuned methods of trying to, get price cuts essentially to people, but not just to everyone who does. Maybe some of them don't need it, right? And this more brute force. But this is really just reminding me of 5 years ago, 2019 Q1 was a mess for multiple reasons. The tax credit had just ended or been cut in half in the US. And there was a huge pull forward of demand. And Tesla attempted to then pivot to Europe for the Model 3 and then screwed up their homologation. And then, no cars were delivered. And the earnings that quarter were very bad. And that's when the stock hit its multi-year low at I believe $176 pre-split. And I remember that because I had bought my retirement account, went all in at around $200. I remember getting an extra check of $5,000 for something. I was like, should I put this in too? And I put it in at $176, and that money, over 20x. But the fear, the feelings are kind of similar to today, in terms of, man, is anything going to go well? And if you look long term, you still could see the light in both cases. But I think we're not fully through that 20.
He sent me a long list of public facts, so I thought I'd share a few of them. The entire point of Tesla is to create innovative zero emissions products and accelerate sustainable energy transport. But in order to do that well, we are also focusing on creating the most sustainable factories along with a average, recycle up to 100% of the water, have over 8 megawatts of installed solar capacity, and source renewable electricity. Afforestation for Gigafactory Berlin, current site is even faster than construction. In the nearby area, the team has helped ecologically improve 340 hectares of the existing forest through underplanting hardwood. We incentivize a sustainable lifestyle of 45% of our employees commute by public transport. Charging installed 500 wall connectors, 12,000 people Like an anonymous account corrected Rohan about something related to Tesla, which is not a good look. Isn't that crazy?
Definitely not a good look. It's kind of his responsibility, it seems like, from a PR perspective. Surprised he hasn't been fired yet.
Yes. Yes, a good account. West Hicks.
Hey, yeah, man, I don't have anything to add necessarily at this moment. I haven't been in the last 30 seconds, so I had to get out completely and jump back in, but happy to talk.
Yeah, you're not the only one. I have to do the same thing. Can YouTube folks hear me right now? Okay. If YouTube folks can hear me, please give me a thumbs up. Running a stop sign in Bel Air, California.
Yeah, I saw that. I realize that 12 may not be acting on the things that it visualizes. Those two things might be orthogonal now. But it slowed down for something. It obviously didn't come to a complete stop. So I'd be interested to see if it continued to do that same behavior or if that was a one-off to establish causation.
If you had to guess, what do you think happened?
If I had to guess, my best guess would be hallucination, because it started to slow. I didn't see anything else on the visualization or anything else in the video. It's very grainy though, low resolution. So I don't know if it somehow saw something that the human couldn't see, but she didn't make any comments on that. So I couldn't easily tell why it was slowing sign. So that would be an interesting data point if for whatever reason it wasn't stopping there. But it seems like a like 2 or 3 or even 5 runs at it to see.
All up to this point,
Hey, one more thing. I can hear you in
very risky decision, but I am curious about how it'll impact the marketplace, meaning in the eye of the consumer. Obviously, just they can. But I have a feeling that they'll be bailed out by somebody if
Okay, I guess we'll see. Do you want to do a coffee bet on that? Okay. Well, you said they were going to be. You said you have a feeling they're going to be bailed out. So it sounds like you picked your side. End of 2025. Okay. Let's talk Tesla is your alias. So let me just type this up real quick. We haven't had a coffee bet in here for a while now, so I guess that's good. Coffee bet. Rivian. Bankrupt by Q4 2020, by the end of 2024, or by 2025, which means end of 2025. So, I got Elon on my side now. How do you feel about that? You're betting against Elon. He said they have 6 quarters or something, right? You have Gary Black on your side. So is this the Model 3 performance? Okay, good. I want to talk about Model 3 performance real quick. I guess there's an article from Drive Tesla Canada about the specs. So, can you guys still hear me? Can you guys still hear me?
yes.
Okay, good. The new Model 3 performance specs leak, and it looks like it won't disappoint. While we wait for the official launch of the upgraded Model 3, I'm going to skip the fluff, get to the business. According to documents uncovered by Julianne, the Model 3 performance will be getting a new rear motor. The motor is labeled as 4D2. While this is different than the plaid rear motor, which is 5D2, it does come with more power, up to 303 kilowatts or 406 horsepower. This compares to the legacy Model 3 performance, which had 250 kilowatts or 335 horsepower of peak power at the rear motor. The new rear motor will be paired with the same front motor as before, 3D3, which has 158 kilowatts or 212 horsepower for combined power output of 461 kilowatts or 618 horsepower. This is a substantial increase from the previous in the legacy Model 3 performance. Much of the increased power will be felt at the top end. The old Model 3 performance rear motor reached peak power at around 75 kilometers per hour. But the new 4D2 reaches peak power at 110 kilometers per hour or 68 miles per hour, meaning that feeling of gut-wrenching acceleration would be experienced for much longer than before. Something that will help the Model 3 performance in races longer than a quarter mile. Other specs leaked in the document include the weight, which will be the same as before, the size of the battery pack, 82 kilowatt hours, and even the increased power. The new Model 3 performance will still get up to 270 miles of range on a full charge. However, this figure is based on a stricter testing cycle than the EPA, so we can likely expect a figure closer to 311 miles in North America. The biggest question that now remain are when it will be officially launched and what it will cost. The launch will likely take place this month, given that Tesla was recently spotted filming promotional footage of the Model 3 performance in Spain. As for the price, all of the changes, both internally and externally, suggest it should be priced higher than its predecessor. But Tesla may surprise us when they finally announce the new Model 3 performance. There you go. Wes, maybe you should wait for this one. Both Wes's.
Yeah, I'm actually considering it. I'm wanting to see what the 0 to 60 time is. If it's 2.3 or less, I will probably wait.
If it's what, 2 point what, less or what?
Sorry, my current X is 2.3. So if the performance 3 gets better than that, then I would consider waiting for it.
You think it's going to be like that though? What do you think? You're the engineer.
Yeah, when I look at the horsepower, the torque to weight ratio, it should be somewhere in the 2.3 range, I'm guessing.
How much would you be willing to pay for it?
Oh, I'd probably pay an extra $5,000 for it.
Mm-hmm.
So kind of like the top end of what they usually charge for performance.
Mm-hmm.
And it looks like the range isn't going to go down much. So I find that to be interesting.
West 6?
Yeah, it's documented. And then on the leak, they say that the weight isn't going up or down. So it's just remaining the same. I don't know the exact numbers. I'm more interested in the relative nature.
Okay, great. Side notes at the top of our screens is Florian Minderop letting us know that FSD Europe is coming to Europe. FSD is coming to Europe in 2025, says Florian. He says the new regulation is adopted, and he says I will keep you posted when you have more information. All right, great, Florian, thank you. And Dana Chandler also let me know earlier in YouTube Live as well. So FSD expanding to Europe next year. Nick Cruz Paten for Model 3 Ludicrous says at the top of our screens. Shanghai-made cars will come with the LG battery pack. Presumably, Fremont cars will come with the Panasonic pack. Okay. Anything else? Any other questions, comments? Munro and Associates announced that they're starting the Cybertruck teardown. So we're going to see a flurry of videos from them in the coming days and weeks about the Cybertruck. I know he's been very excited for this, so that's great. Alex, according to Patris, thank you, Patris. Alex says production at Giga Berlin is expected to be suspended until the end of next week, which is longer than previously assumed. This is at the top of our screens. According to initial estimates by Tesla, production was expected to be halted until the end of this week. The reason for the delay is said to be complicated repairs to the power line, the company announced on Wednesday at the request of the Bild newspaper. So 2 weeks of production loss, but Troy says they have ample inventory, so it may not hit deliveries as much as it hits production. So there's also that. Any other questions, comments? Please request to speak. Otherwise, we can end the space. It's been about an hour and 20 minutes. We had maybe 5 minutes of technical difficulties. So it's a pretty good length. An hour to an hour and a half a day with YouTube streaming at the same time and no editing work afterwards. Keeps it tight. Keeps it manageable, daily size. We have machine coming up, so it's probably going to go on for another 2 hours. Hopefully he finishes Popeyes. Did you finish your Popeyes? Did you finish your chicken sandwich?
Well, I just want to say, quote, pretty good length is what your mom said to me last night.
Well, you okay with that?
I'm okay with it. I did not have chicken today. Today I had steak.
What do you usually get?
I didn't go to Popeyes. I go once a week. I usually get either the crispy chicken sandwich, usually, or I get chicken tenders.
Do you get barbecue sauce with that?
You know, I don't really use the sauce. I like it as it is.
Did you read my article yet?
No, I've been in a meeting. Unlike you bums, just sit around here unemployed. I rely on, you know.
Are you going to get this new Model 3 Performance? I know you have one from 2010.
No, I don't think so. We'll see. We'll see if my other stocks appreciate positions, and then maybe I can get one for my wife. But not going to be from Tesla unless Tesla goes down, and then I buy a whole bunch of Leaps, which I would love to do.
Where Group Gavin says his buying price is $85 per share. What do you have to say for that?
Who said that?
Group Gavin.
I don't know who that is. Yeah, I mean, that's too low, in my opinion. That's like overly conservative. I think 150 is a good spot to start buying again. But you could argue it could go down lower, just in terms of sentiment and around earnings. I mean, if they print 55 cents earnings this next quarter, I mean, like that's you're almost getting to like annualized 2.1, $2.2. That's nothing. Okay. You're still gonna have a P ratio of 50 to 60 if the share price is at like 120. So it's just numbers. That's what the numbers work out to. I know people don't like to hear it. However, I still do think Megapack somehow one of these quarters is gonna, boost up earnings a few dimes, and that's enough to, keep share price above 150. So I do think that's a good buy. I'm thinking 150.
I mean, it was only 2 weeks ago when you bought Leaps at 200.
That's like partially correct and incorrect. It wasn't 2 weeks ago. That was before earnings. I bought some as it started going down, and then I bought a lot more after earnings, in which was at 190 and 180. And then when it went back up to 200, I sold. And those calls were shorter expiration dates, so they had more leverage. And I sold those when it went back up to 200. And I still had the Leaps that were like 2 years out. And then I'm sitting there just thinking about what's happening valuation wise and the upcoming like weakness in this quarter. And so I sold the rest of those at 200. And so, yeah, I took a loss on those versus where I bought them. But I don't regret it. I mean, I don't regret that final move. You can't hold on to things just because you made a mistake the first time. I'm not doubling down. And obviously I don't regret it right now because the share price is down already 12% or something. And those
Okay.
calls would have been down 25% if I held on to them.
Why don't you stay on mute or listener mode as you enjoy your food? Why do you have to come up to speaker mode while you eat when I asked you a million times not
All
to
right,
do
I've
that?
stopped. I apologize. I had a
Do you
I had
like
one of-
sorry, because I just want to
Oh,
understand, like, do you forget my one request from you? Literally, I don't ask for you to do anything else.
I forgot
Do
momentarily.
you forget? And if you forget like something I ask you every time, every day, you should get that checked out. Your memory
So-
issues, upgrade your memory to some sort of chip from AMD or something.
Well, if it was AMD, then it's probably not going to work out well. I think I should get NVIDIA. But I did eat my lunch well early. I was like, I might go on the space. So I'll make sure I'm done with my lunch and all my steak salad. So I did think about that ahead of time. So I don't know. It's not black and white, Iman. Okay, some of us we're gray area mistakes.
It's very black and white. Don't eat as you speak. How is that gray area?
I'm just
You know,
saying.
I'm starting to question your judgment with just simple logic. Anyway, Wes Wallen says, Telescope, we can confirm this. We've also been told there's a chance FSD beta may be preliminarily released this October in some regions of the EU. Tesla will also be transitioning from hardware 3 to hardware 4 later this year at Giga Berlin due to regulations being adopted. Okay. Thank you, Wes. Pan says he found a white 2021 long-range Model Y with full FSD acceleration boost, tow hitch, and only 7,500 miles listed for $38,500 on the Tesla's used inventory page. Yeah, that's amazing. Wes, can I ask you a question on NVIDIA?
Yeah, shoot.
Since we started talking about it a couple of weeks ago, has your view on the company changed at all, or is it just more? It been more reinforcing for you?
No, it's more reinforcing. I was kind of hoping, that the rise of Nvidia's stock price, market share, people understanding it would kind of drive other companies to make announcements and try to like step up their game. But it hasn't happened. Like, we talked about yesterday, Jim Keller put his timeline out, which was nice, but it wasn't, very deterministic. So I was kind of hoping to see more of that. Kind of like, Optimus videos being put out. Now we have all of these other companies coming out of the woodwork showing their, bipedal robots. So I was kind of hoping for the same thing, but, just it's more of the same. Chip development's really hard.
Yeah. We have Bradford coming up. Let's see what he has to say. Bradford. Your audio quality is bad. But do you want to just say something quickly?
Yeah, I'm in Austin. Let's ride V12. I'm coming down to your neck of the woods, Yaman.
Thank you. I'll reach out to you in the DMs then. Thank you. Machine coming back up.
I'll wait for my connection to get better and we can talk a little more.
All right, sounds good.
Did it go totally quiet or is it just me?
It's totally quiet. We're waiting for machine to come up, but it's not working.
Okay.
Anyway.
Yeah, we're going to Franklin Barbecue and then I'm gonna do some testing around there. You're pretty close to downtown Austin, right?
I'll reach out to you on DMs,
All right, cool,
but we
cool.
can talk about it. Who's going?
It's me and my buddy that's we've been driving this trip from. We're
Okay, great. Yeah, Franklin Barbecue is great. I've been there a bunch of times. One of the best barbecue spots in town, of course. Wes?
Rudy's barbecue is better. Hey, it'd be great if you guys could do some roundabouts. So, that's my quick plug.
We absolutely will. Well, I'm going to Carmel, Indiana. It's got 100 roundabouts and a 5-mile radius. Definitely will do that.
Dude, that's sweet. That's the place that has the most roundabouts in the country, right?
Yep. Maybe
nice.
even the yep.
Oh, I'm very excited.
Hicks. Machine? Yeah, I mean, it's like I actually want to keep the short-term trading stuff to a minimum in the space. I know you like your call options and shorting and puts and everything. And but I really want to just talk to Wes about the engineering behind, and I want to understand the company a little better, if that's okay with you.
Yeah, man. I do need to interject. I'm not going to be staying in Austin tonight. We will be moving on. So if you want to do some V12 research, hit me up.
Okay, will do. Thank you. All right. Wes, I was talking to Meta yesterday, and we were talking about how you can increase the training time of a neural network model and reduce the cost of training, or increase the accuracy, or reduce the need for compute, to reduce the model size on the inference side for the Chinchilla paper. And I know you guys had a back and forth today a little bit on that. Do you not agree with that kind of take?
Yeah, I generally agree that if you improve the performance of your training model, that your inference should get a benefit, should get a bump. It's not extremely linear, though. And I would say that there's definitely diminishing returns when you add the differences in your architecture that made it more efficient. You could seemingly reduce your efficiency on the inference side if that's not a part of your validation when you're validating the changes that you're making. So it's not a given in any way, shape, or form.
Okay, great. That's a very interesting space. What is, so I know you sent me a link, but I didn't see the prices of the GPUs there on that link. What's that link that you shared?
That's to if you were a developer and you wanted to buy or more specifically rent some space on AWS, that's what you would do. That's where you would go. You would go and you'd look at these different virtual machines, and you would pick what type of a virtual machine that you would want and what types of GPUs would be attached to each virtual machine, and you'd pick your compute power as well as your AI type, GPU power, as well as your memory, your storage size, your ingress, your egress, networking speeds, things like that. And then they would quote you a price. And then if you bought a certain amount, you're a new customer, then they give you discounts, da 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 da. So, you have to kind of amortize that price over the course of how long you think you're going to use it. Do you want spiked usage, or is your usage kind of flat, or are you going to need to surge and have some type of spike pricing? There's tons of things that go into the cloud contracts for AI compute. I mean, I can talk about really quickly, and then I'm going to have to go in a few minutes. I can talk about when we set up contracts for like large AI compute, we're talking about multi-million-dollar kind of commitments, and then you get very, very deep discounts, for things like that. And this is over the course of 2 or 3 years. And if you're signing up an enterprise customer and you're an enterprise dev and you go out to that link, your terms and conditions, for how much it's going to cost you would be set up over the course of 6 months. Because then you're talking about 3 to 5 years, 3 years minimum, but 5 years is more the normal terms for an enterprise cloud commitment, because it just takes so long to transition from one cloud service to another. So there's a little bit of detail for you.
Thank you. How much time do you have? Like 5-10 minutes?
Yeah.
Okay. So what's the utilization rate for the GPUs that are on hosted by Microsoft or Amazon? Like they're not they're working every second, right?
Yeah, totally. And I can take you down a quick memory lane trip. So in 2014, I was pushing really hard to have GPU heavy VMs in Azure when I was at Microsoft and working on Xbox, because we had a game that we were trying to launch that would utilize GPUs in the cloud to do all of the physics work for the multiplayer variant of this game. And it was really difficult for me because they're like, well, this is great. Like we can put these in Azure, but who's going to use them when, nobody's playing these games? And they were totally right, because this game also has a lot of surge usage, there's no real consistency to it. So the cost of doing that was very difficult to sell that. Well, now it's not so much because these models are so big that they tend to train over the course of days. And as it trains, I hope I'm going down the right path with your question, but as it trains, you can see as it's going through these different epochs where you can see the learning rate is increasing, hopefully over time. And you can see that it's coming to, a kind of a plateau, this final learning rate. And you can make changes along the way, or you can have things planned in advance, or you can have a queue of other AI models that need to be trained. So you're always fully utilizing them. And this is what I would help set up with customers on TPU to be sure that whatever commitment that they bought, that they would be able to fully utilize these. So they'd be running all the time. And, from a cloud standpoint, that's what we wanted as well. We wanted them running 100% all the time because you want the customer to get the best value possible on your service, because that's, how you improve your service over time as well. So it's definitely a win-win on both sides. The customer's happy, you're happy. You get to improve your service because they're maxing out, the ability for the service to provide them value. So you're learning, my devs were learning the entire time that they were maxing things out. So does that kind of get to what you were asking about?
Yeah, it does. Thank you. If you are training models today, I know, H100 is the best, H200 is coming up, but AMD also has a product, MI300X. What would have to be the price differential between those two offerings for you to switch to AMD?
That's a good question. That it's complex though. So normally what would have to happen is a cloud, one of the big three clouds would have to essentially get a contract ahead of time with a kind of early adopter customer to front the service to, provide that data center ahead of time. So they'd have to do a multi-year commitment to fully utilize these things for like a year, and AMD would obviously help front the cost of that for a certain customer. But what is really unfortunate is that even if that were to happen and AMD suddenly went, you know what, we're not going to fund this anymore, and they only did it for like a year or 2 years, then this customer is now built their infrastructure on AMD and then they don't support you. This is like the huge problem of like transitioning from one cloud to another or from one GPU to another. It was this same kind of problem that I faced with TPUs, because if I brought somebody over to TPUs and I said, hey, like I can give you this better price, over GPUs, you can train a lot more, you can train a lot faster, but they're like, hey, like this is, difficult for us. We have engineering resources that we have to spend. And then once we build this pipeline, if you somehow take these things away, because you can't buy them, you can only rent them. So that's kind of the cloud path. And that's the problem that companies have with the cloud path. But then if AMD allows these people to buy them, like like NVIDIA does, now you have the issue of setting them up in your own data center. So now you have to be really good at building and managing and adapting to really interesting conditions for data center usage, because building an AI efficient data center isn't something that you can just find people on the street or on LinkedIn that are really good at. There's not very many people who know how to do that.
Yeah. So
And
you're
if you
saying
did,
it's more than just price differential. You're basically
yeah,
picking a team that you want to
yes,
work with for the longer term, right?
yeah. And then if, let's say, hypothetically, you did get the GPUs and you did find people that could build this data center, now you have to find people that can manage the interconnectivity between these GPUs, because NVIDIA is the only one that sells that now. They sell InfiniBand, which is the way that you connect these things together. So AMD kind of has to work with them, or they have to build their own, which I don't think they have. So imagine how much NVIDIA is going to want to work with you if you bought AMD's GPUs and then wanted to connect them with InfiniBand. They're not really going to support that very well.
Yeah, I think
You
West Six
can
has a question
see,
for you. West
yeah,
Six?
okay.
Yeah, I do. You know, you're kind of making me think about Dojo and the H100s that Tesla bought recently. I don't know if you know the answer to this or if you can speculate, but are they able to use that as kind of a combined compute stack when they're ingesting data, if you will, for training? Or do you think that's two different stacks where, gosh, I need to put this data into this, into Dojo and this other data into this one, so they're running, simultaneously?
Yeah, it's a great question. My quick answer would be it's most likely two separate stacks. And if you're familiar with Chris Latner and modular AI, he's trying to fix that. But the other side of the equation would be that more than likely, when they're able, or when they think they're starting to get close about cutting over to more dojo training, they're going to want to build some bridges, some shim layers that are going to allow them to more quickly make that transition. You could potentially put in some abstraction, more permanent abstraction layers to make that more palatable to certain parts of the model or certain parts of your pipeline. But I would usually I would strongly recommend against that, because it's just a dead end. It'll just make your new thing crippled over time. So I would just recommend like a separate stack and just make that new stack as efficient as possible. And when you bring over layers from the old stack, be sure that you architect it in such a way that you don't paint yourself into a corner. Like, if more than likely you're, just to maybe go a little bit deeper on this, more than likely your new stack is going to have something or pieces of it that are going to be way better than your old one. That's the only reason that you'd move. And usually that's like ingress speed and like the TikTok speed from calculate to communicate to calculate again. And those pieces have to be modified specifically for that new stack. So I would never like write an abstraction layer, for
Yeah.
something like that, or else you just cripple it right off the bat.
Wes, so you believe NVIDIA obviously NVIDIA is in a very dominant position right now when it comes to GPUs for AI training,
Yeah.
as well as inference. Everyone agrees, and their results show that. And you seem to believe that this is going to continue for many years down the line, even if others' efforts to catch up to NVIDIA succeed to a certain extent. Jensen and the NVIDIA team will continue to be ahead of the rest of the pack. And would you say that NVIDIA is in a more dominant position today than Tesla is?
Good question. That's why I try to pay attention really closely to what's happening in China with the other automakers, because it does seem like they're producing a set of products that seem about as much value as Tesla's delivering. So they're pretty close. Like they're good competitors. But I see NVIDIA has it's more of a nebulous lead, and it's harder to see because they don't have factories, they don't manage factories. They manage a software stack and a design team that develops all of the IP. So all of their stuff is kind of wrapped up in intellectual property inside of software and services, whereas Tesla's is wrapped up into manufacturing. And I do think that they have an incredible lead in manufacturing efficiency from what I'm seeing in the China factory. I'd love to take a tour one day of the China factory, because like I know Fremont really well, as well as I could from 7-8 years ago now. But to be able to see like the improvements that they've made would probably give me a good sense on how much their lead is. But again, Chinese car manufacturers are making incredible vehicles. So NVIDIA has a big lead in their software IP stack.
So it sounds like sounds like you think NVIDIA has a bigger dominant position than Tesla does. You just don't want to say it out loud.
The only reason that I kind of hesitate with that is that Tesla's doing their custom ASICs. And if they can deliver on that on the training side, they'll have a bigger lead, right? Because that's tens of trillions of dollars if they solve that. Like that's an incredible thing that they would have accomplished. Yeah.
Interesting. So if Tesla succeeds in Dojo, then BYD is no competition.
I would generally agree with that because they will solve FSD. They'll be able to make millions of very low priced robotaxis, and that will just decimate any other car maker, like across the board.
Even with their $10,000 vehicles?
Yeah, totally. Because it won't be self-driving. That's the game changer. It's worth way more than the vehicle. Like way more.
Mm-hmm.
Yeah, we've done those numbers.
Mm-hmm. Yeah, but when we were running those numbers, there were no $10,000 option.
Right, but it doesn't matter. Like the price, the value of a robotaxi is somewhere between 100 and 300 grand. Like it just dwarfs the production cost of the vehicle. Granted, this assumes that you have a fleet of them.
How did you get to 100 to 300 grand value for FSD?
It's the functionality and the usability of the vehicle because it's running all the time, essentially. You get way more utility out of it. It's running like 5 times more than a normal vehicle.
Mm-hmm.
And you would pair that with electricity.
If the normal vehicle costs $10,000, then how did you get to $300,000?
The software.
I know, but you said the reason why you think it's 100 to 300,000, which I believe is in line with what Elon said on Autonomy Day. He said $30,000 of gross profits per year. So that's how you get to hundreds of thousands of dollars of value per vehicle. But the thing is, at the time, per vehicle meant, the value of a price of an average vehicle was like $40,000. But in the future, it seems that the average price of a vehicle is going to be about $10,000-$15,000. So that's a big difference if you multiply 40,000 with 5 versus $10,000 with 5.
So here's how I look at it. The robotaxi, let's say it costs $10,000 to make, and then it's going to drive for 10 years and roughly can drive like, somewhere between 50 and 70,000 miles a year. So at even at the low end, it's going to drive 500,000 miles, and it will roughly garner at least like $1 per mile. That's how I arrive. Very basic way. I have a spreadsheet that goes into way more detail than that. But that's kind of like the basic napkin math of why you want to build an autonomous car.
Yeah, I remember that we disagree on per mile cost in the future.
Yes.
So you're assuming $1 per mile. I think it's going to be less than that for various reasons.
Yep.
Yeah.
There you go. It assumes a lot though, right? It assumes that you solve FSD for all locales, which is a big daunting problem.
And then you're also assuming no one else would be able to do it at the same time, even though we know Waymo pretty much did it at this point.
Well, they have to scale, right? This is why their vehicle costs somewhere between 100 and 200 grand, because they know that if they solve it, that vehicle is going to be worth way more over time, right?
Yeah, I don't know. I don't think it's adding up. So in one conversation on NVIDIA, we're talking about how training costs are declining by orders of magnitude. A few years ago, Elon said by 2030, creating autonomous driving is going to be like creating GPS today. It's going to be very easy. Anyone will be able to do it. And so why wouldn't BYD be able to do that if they can, and then add it to a $10,000 vehicle?
I don't agree that anybody will be able to do it. I think that's a very low likelihood.
Okay.
So I'm not in that camp.
Okay, so you disagree with Elon then. Wessex?
Yeah, I'm just curious if you guys know the plan for Google. Are they planning on putting these LiDAR devices on just any company or any brand's vehicles? Or are they going to contract with somebody to make them for Google? Or like, I don't have any clarity on that. Do you guys?
I don't know any of their plans for that. I just know what they've said publicly.
Yeah, I find it fascinating that they're growing so quickly in terms of geographical space that they're able to operate. And of course, the cost of LiDAR is insane. So yeah, I just don't know what their plan is with them.
Okay.
Hey, Yaman, I'm happy to pick this up again in the future, but I need to head out.
Okay. All right, let's end it then. Thank you very much, everybody. And I will talk to you tomorrow. Thanks, Wes.